Investors bide their time until the Federal Reserve's latest policy meeting, while the pound fought back against the dollar after taking a hit from the latest twist in Britain's Brexit saga. Now, with little fresh information on developments in China, US trade talks, focus has been turned this week to the US Central Bank and its interest rate plans. Now, as the second day of the week's closed out in Asia, Tokyo's Nikkei slipped 0.1% to 21,553 points. The Hang Seng was unmoved at 29,410, and the Shanghai Composite managed a gain of 0.1% to 3,100 points. Banks helped lead Wall Street higher on Monday, while Boeing and Facebook were a drag. Investors eyed this week's Federal Reserve meeting for affirmation of its commitment to patient monetary policy. The Dow Jones Industrial Average rose 0.25% to 25,914 points, while the S&P 500 gained 0.33% to close at 2,833 points. The Nasdaq Composite also added 0.25% to 7,714. For more on the markets, we cross to Arabile Gumede. He is live for us at the JSE. Good afternoon, Arabile. Over to you.
Yeah, good afternoon, Nzinga. Well, the market is again positive today, 0.5% to the good thus far in our midday trading picture. There are a few negatives, but generally the picture seems to be that of a positive one. When one looks abroad, of course, Asia may have been a little bit mixed, but it does seem that things out in Europe are looking a little bit better. We did have some earnings out as well locally, the likes of Hulamin coming out with their sets of earnings. Steel has not obviously been the best prospect in South Africa, considering the construction companies and how they look. So we'll continue to get into that picture. But as you mentioned, that Fed meeting and just how things fare on that front will certainly be of keen and key interest. For now, however, let's take a look at those numbers and we'll unpack the details in just a bit. Yeah, well, as you can tell, that picture over there firmly pointing towards a much more positive sentiment for the market today. So let's unpack that now a little bit more. Martin is with us here in studio, of course, as we unpack that. Martin Harris from IG South Africa. Martin, thank you so much for the time. But 0.5% to the good. Generally, we're feeling a little more positive. Even yesterday, seeing a sense of positivity sort of flow through. Is there anything we can attest it to, or is this just pre-Fed sort of positivity, if we call it that?
Thank you for having me, Arabile. Definitely the markets are positive today based on what we're seeing out of the resource counters. So as we would have seen, the viewers would have seen on the screen just now, pretty much all of the resources are positive. We've got platinum up, palladium up, gold up, oil up. And so that's really affected the resource stocks on the JSE today. We've got Anglo-American Platinum and Sasol really leading the charge, both up more than 2.5%. So that's benefited, and what we've seen are the guys, the retailers, they're sort of lagging behind today. I also saw some of the banks, Nedbank, down for the day.
Yeah, I mean, that's those two sectors, retailers and banks, are really suffering as a result of consumers and their, impacted sort of state right now. Another sentiment that makes them impacted, of course, is the Eskom saga in itself. Yes, we've heard a little bit of an explanation coming through from Eskom and even the Minister of Public Enterprises, but it's surely bound to hurt no matter what, right? The sentiment will filter through not just to the stocks, but certainly into South Africa's GDP as well.
Absolutely. So the banks are really quite sensitive to fluctuations in South African government bond prices as well. And so South African government bonds have been taking a bit of a hammering of late with the poor sort of prospects for the country. The fact that we're having the rolling blackouts or load shedding is testament to why foreign investors and local investors are sort of nervous about investing in the country. We're probably going to have quite muted GDP for the first quarter of this year because we've had now the second round of stage 4 load shedding. We also had it again in January. So things aren't looking great for the local producers and as well as the consumers. Consumers still not earning any more money than they were before. people are under stress. And so, yeah, we're going to see the retailers struggling for the rest of the year.
Yeah, we're seeing the rand then come up to 14.38. It was even at around 14.45 or so. Yes, it's only 7 cents, but for now we'll take it, right, considering that we do have these rolling blackouts. And we also have the Fed meeting as well to expect.
Absolutely. So, I mean, we've got the rand firming slightly. I think that's just due to some general dollar weakness. The dollar index was down 0.15% earlier, and that's really because the US markets are rallying. This is on the back of the US Fed monetary policy meeting. They start their 2-day meeting today. Markets are expecting a dovish stance, so we're not expecting the US central bank to raise rates. Are they going to keep them unchanged, or they might drop them? But that's not too likely. So we're expecting them to stay as they are, and that's been positive for the US equity markets, as well as, you know, combined with the higher oil prices. So there, if you look at the United States, their resource stocks are all running today.
Yeah. If we continue with that resource picture, we can talk about Brent crude. It's a topic we haven't discussed for some time now, but at present it is actually up 1%. It continues to just edge its way to $70 a barrel. It just keeps on getting stronger day by day there.
That's right. So, I mean, as the price gets higher, you've got more and more producers coming online in the United States. They use typically gas to liquid plants. Sasol's got a big gas to liquid plant that they're building in the United States. It's almost up and ready. So by doing that, OPEC are under pressure, so OPEC then scale back their production to try and keep the prices high. And so OPEC announced today that they were committed to reducing their output further, and so that's why we're seeing this increasing oil price.
It's going to be a difficult one then for South Africans as well. Towards the mid to latter part of last year, we saw quite a few petrol price decreases. That's bound to go, the opposite direction now for sure. We've certainly seen that come to the fore already. And April is also that month when, the tax situation sort of changes as well as everything comes into effect.
That's right. I think we definitely are set to have a few more petrol price increases over the next few months if there's no change in the currency prospects.
Yeah. Let's talk about earnings then, that earnings picture. We're still in sort of an earnings season, even if it does seem a little more tired, if we call it that. But Hulamin coming out with a set of earnings today. Construction companies suffering, as we've been able to tell over the last 2 weeks, even one deciding to go under business rescue. Hulamin playing in a similar sector to that. How's that sort of impacting their business?
Yeah, that's right. So, I mean, we're sort of towards the end of the earnings season. Hulamin, they operate in the prefabricated aluminium space, and so they can count Tesla as one of their customers. They actually had a really strong sales year last year. First half of last year, very weak rand. They were able to get a lot of exports, and also there's this global shift away from single-use plastics towards things like aluminium cans. So they were able to get a lot of sales through in the year, but I see that they've put an impairment of 1.5 billion rand on their aluminium plant in South Africa, and so the stock is down about 2% today. It's at R4.50. It hasn't played well into their favor. That stock is down probably 100, down more than 6 rand in the last 5 years, and so they really are struggling. The costs of operating in South Africa, the energy costs are still very high for guys like Hulamin, and so the hope there is that if there can be some changes in the current US-China trade wars, they need to get their exports out to China, and so if they can get some settlement there, Hulamin stand to benefit.
Yeah, we'll certainly see how that picture fares, but really appreciate your time there, Martin. It has been great, and we'll continue to see how things fare. Hopefully, no load shedding for you when you get to the office. Thank you so much for the time there. Of course, Martin Harris there from IG South Africa, unpacking that market picture. As we've said and noted a little bit earlier on, 0.5% to the good for now, still 14 Rand and 30 odd against the US dollar. That is the state of the market for now, and that's where the buck stops. It's back to Nzinga right after this.